Hi there, Linda Hollington here with Coldwell Banker Paradise, and the Band-Aid on her nose. I'm still fighting the sunscreen or the sun cancer with sunscreen and bandages. Today we're going to talk about the conventional loan. We throw around FHA, VA loans, and conventional loans. So what exactly is a conventional loan? Sometimes it's the most, 77% of the loans are conventional loans. So you hear that term quite often. I read an interesting article, which I'm going to share with you. The source is from Wall Street, but it came out from Florida Realtors in May, actually May 31st of this year. So it hasn't been around a while. The FHA loans, that's government-backed loans, that usually have a low interest rate, and 14% of all the loans at FHA. Another 9% are VA loans. That's for veterans and military. A conventional loan is actually issued by a private company, private mortgage lenders, and they're not backed by the government. So they will have all kinds of different loan terms, rate options, and you always have the option to avoid mortgage insurance sometimes with these loans, which you can't with the other ones. You have to buy it. Interest rates are fixed or variable depending on the loan. There's a conforming and a non-conforming. The conforming loans takes you back to government-backed loans. They are loans that the government sponsors, and so then the lender has to follow their eligibility guidelines in deciding whether you can get the loan or not. The non-conforming loans are going to be backed by the bank, so they are a little freer. Like a common one is what they call a jumbo loan, and these are for much larger loans. That's why they're called jumbo. But they can they can decide on their own terms with that. They're not answering to anybody. So when you're shopping, make sure you understand what you're talking about. And it'll make a difference in how you're seen and in what's required of you, which loans that you try to go for. So you might want to go for the conventional non-conforming first and see how that works out. If you can get something like that, because you're dealing with the actual bank that's giving you the money, and that's who you're going to see if you have a problem with the loan or anything like that. It's not somebody way off somewhere. Well, they could be some distance, but not like some of these other ones. And the credit score is still one of the most important things you have to have, whether it's conventional or what, in determining acceptance of a loan. So check out your conventional non-conforming loans first and see if you do qualify for something there. Thank you for joining me. We'll see you again soon.